Hey everyone, welcome back to Fiscal Voyage. My name is Felix. In today's video, we're going to talk about two dividend growth stocks that I am looking at to purchase later this week, Friday, when I get paid. And both of these dividend growth stocks have been paying dividends and growing it for years. So first, let's get started with PPG Industries Inc. You can see here on the fast graph, first off, let's look at how the company performs for the past 20 years. You can see here there is some times where the company has some down years. This is here in 2008 2009 financial crisis, and then it also from 2016 17 and 18 it has some kind of like low growth years. You can see here 2%, 1%, 1%. Prior to that, it had 18 and 17% earnings growth, so that was real good there. But you can see here sometimes there'll be years where it's flat or negative earnings growth. You can see here in 2020 it was a negative 8% growth, and in 2022 it was a negative 11% growth. But that was the past. Let's look at the future now. You can see here analysts are expecting almost 10% or 10% earnings growth for the 2024, 2025, and then 9% for 2026. And if we put the price on the chart, you can see here the company for the most part is around an 18.2.3 normal multiple. That's where the market tends to value this company. Is a specialty chemical company in the United States and triple B plus credit rating, which is good, and pretty decent long-term debt to cap ratio of 43%. But you can see here right now we have a PE of 15.5 with an earnings yield of 6.4. I like this to see this is 6.5 and higher, but it's getting there, 6.4. It is a high quality company. You can see here even in the financial crisis in 08 09, the dividend was continuing increasing, which is something I really like. When they've increased dividends during that year and during the COVID year, they held it and increased it as well. And speaking about the dividends, if we go to performance, they're not a huge grower in dividends. They grow 5%, 6%. The most recent one was 4.9, almost 5%. But in the previous years, over 6%. In 2016 they had a 10% increase. But they're very conservative with their dividend increases. And the good part of that is they have tremendous or really good payout ratio. You can see here based on 2024, the dividends payout ratio is about 31%. So that's real good. So the dividend is very well covered with earnings. And if we look at operating cash flow also covers the dividends very nicely at 25%. And let's see if free cash flow covers dividends as well. Yes, so free cash flow covers the dividend very nicely as well. So the dividend is very safe. The only thing, like I mentioned, I like the earnings yield of 6.5 or higher, and the dividend yield is kind of low at only 2.8%, which is kind of low, but you're getting a secure, safe dividend with this company. And earnings are expected to continue to grow, so that's a real good thing. And if we look at analyst scorecard, the analysts are pretty accurate with predicting this company 75% of the time they hit it. 25% the company, they miss it for whatever reason, but for the most part they're pretty accurate. And we go to forecast in the long term, you can see here analysts are expecting about 8% in continued earnings growth for the next 4 or 5 years. And there's 4 analysts expecting that, so that's real good. And even if the company were to revert back around the, what was it, a 18 PE, and we go back to forecasting long term, so if we were to revert back at 18 PE around here, you can see here you can make a nice decent 13% annual rate of return. Now if we go to Morningstar, we can see what these guys think of the company. And Morningstar gives it a 3-star rating, which is a hold. The last price of 125 is slightly over the fair value estimate of 118. So Morningstar thinks this company is slightly overvalued. Let's look at some other things here. Compared to competitors, you can see here most competitors are more or less, this one's overvalued, Sherwin-Williams overvalued, this one is undervalued, and this one's slightly undervalued, where PPG is kind of slightly overvalued. Another thing I like to look at over here, if we scroll down on Morningstar, is over here with the forward estimates. You can see here they're expecting net income to continue to grow, which is good. Um, Earnings expected to grow is good, so they're in line with fast graph, and the dividends expected to grow, so that's good. I like that. Sales, price to sales, currently at 1.9, but based on estimates, it is lower future price to sales, so they're expected to continue to increase revenue, so that's real good. And if we go to CFRA, you can see here, right over here, CFRA gives it a buy rating with 4-star. Okay, so the price target for 12 months is 157. Again, the last closing price is 125. So based on the price target, is undervalued there, and their Fed valuation calculation is at 149. So CFRA has it the company undervalued, and you can see here, if we go up here, revenue is expected to increase here in 2024, so 18 million or 18 billion, and 2025 and 19 billion. And you can see here earnings are expected to also increase very nicely for 2024 and 2025. So that's, all good things that I like to see. If we go back to the fast graph, over here, you can see, it's kind of there. I will actually like it at around $120. But this is not a bad spot to open a position. I don't own this company currently. It's not a bad spot to open a position here. Something I like to. And if we look at the chart here, we go to the monthly chart. You can see here, this stock for the most part follows the 50 moving average, right? You can see here, here nicely, but now it's under it. It was under here, and it bounced, but over here that's not a moving average. I like to see moving average under the price. That gives a good support, but now it's uh over the moving average over the price, so that gives it like a resistance. So this could be a possible resistance to take this stock down. If it gets down to here 110, I would definitely be buying a lot more, but I'm thinking about opening a small position, maybe like $1,500, $2,000 here at current price, just kind of open position, and then if it gets to 110, $110 buy more shares. This is where I really get heavy on this stock if it was to get to this low. But now it's not a bad time to buy shares. If we look at the 3 month chart, you can see here right at that $112, $115, and what I was mentioning before, it would be a great buying opportunity if it's to get down here. But we really don't know if it can get down there, right? So that's why, is it okay right now? Right now is okay price. That's why I'm interested in looking at buying shares of this company. You can see here the weekly chart looks like in a downtrend. There is nice support here around 120. So 120 is a good support area. Bounce here and bounce here. So it's possibly, it could be bouncing. You get a little lower and then bounce. But we really don't know. We're just looking at the chart and getting a good estimate. Is it a good price now? And okay, so let's look at the second stock, OZK. So Bank OZK is the other stock that I'm looking at. Recently, they had an issue by Citigroup lowering their buy sell recommendation to a sell because of loan issues. But I think it's an opportunity to buy shares of this company. If we look at the earnings, you can see here earnings has been very strong. High growth, double digit growth, 20%, 30% growth. They had a down year in 2020 and a down here in 2012, but for the most part, it's been growing very nicely and strong. And analysts are expecting, continued growth, slowing down at 2% for 25 and 8% 2026. But the thing is, the price is so undervalued. The 6 PE, 6.6 PE, where it normally trades at 15 PE. In the long term. So we shorten this time period. So the stock normally trades around 11 PE. So we could have great earnings return potential here. Total annual rate of return expected at 32% for the next few years. If it's to revert back to this 11 PE, and as long as earnings continue to grow, eventually the stock price will follow, and that will drive the price of the stock much higher. It has a nice yield at 4%. Earnings yield, you can see here compared to PPG, which was 6.4, this is at 15, so almost more than double that. And it doesn't have a S&P credit rating, and it doesn't show a long-term debt to cap, but it is a high quality company. And why I say that is because look at this. In 0809, earnings grew 8% and 9% 2008 2009, and the dividend also grew. And then in COVID, sure, earnings dropped, but they continue to pay the dividends. Another thing I liked also, which I'm not concerned with the news, is that recently they increased the dividend by 3% in July 1st. So that's very strong confidence from management. So you can see here, or 2.6%. It says 3% here, but they increased the dividend, and they increased the dividend. Every quarter, this company is increasing the dividend. So I like it a lot. I own shares of this company already around $20, so I'm up very nicely. But I'm thinking of buying more shares to up my position. So this is the other stock that I'm looking to buy. And if we go to the analyst scorecard, the company basically beats or hit the analyst expectations, so that's real good. And forecasting long-term growth, they continue expecting around 6% growth. You can see how undervalued this stock is. If it's to revert back to a P around 10, you can see here we get 22% annual rate of return for the next few years. So I like that a lot. And then performance, you can see here the dividends. If we straighten, make this bigger, you can see here 12% in 2023, 11% in 2022. 2021 only 5, and then it's double-digit dividend growth, which is very nice, and they have a low payout ratio. And then speaking of the payout ratio, you can see here the payout ratio is around 25%, so the dividend could continue to grow very strongly. Operating cash flow covers the dividends. I don't think free cash flow covers. Oh yeah, it does. Covers the normally banks free cash flow don't cover the dividend, just operating cash flow. But I like this a lot. This is why I am interested in buying shares. Now, if we go to Morningstar doesn't have a rating, but CFRA gives it a strong buy rating. You can see here strong buy. One thing I want to show you here, where is it? Okay, you can see here revenue growth compounded annually. The 5-year has an 8% annual growth, 3 years 13%, and a year over year 15%. So revenue continue to grow, which I like a lot. And you can see here everything is positive, neutral, street sentiment, price momentum, neutral. And then we go to the chart here for OZK. You can see here it's right on the monthly 50 moving average, which is good. It's above the monthly moving average, so that's good support area. You see how it bounced here, it bounced here, and it bounced here, and now hopefully it will bounce here. It's at that $39 level, which is looks like a good support area here. 36, 37, 38, $39 area right here. Bounce there, bounce there. This one it dropped. So this is why I'm interested in buying more shares of this company. And you can see here on the 3-month moving average, $36 is right at the support. So if it to come down here, I'll definitely be buying more shares here. But right now I'm looking at it as kind of like, oh, you know what? Maybe I could split between PPG and Bank OZK, split the difference, and kind of buy both company a little bit. And you can see here, this is where that news for the Citigroup dropped. It had a big drop from 46 all the way down to $38. So that was a good buying opportunity there. But I didn't buy it because I was waiting for it to settle down the news. Earnings are coming up soon, so that'd be interesting. But because, like I mentioned before, the company increased the dividend, so management is very confident in the company. So that's good. For the most part, management don't increase dividend and they're having issues because that means they have to pay this out more. But anyway, those are the 2 companies that I'm interested in buying this week. Let me know in the comments what companies you guys are planning to buy. What companies are you guys looking into? Again, if you're new to the channel, make sure you hit that subscribe button and like this video if you enjoy it. Thank you and have a good one.